All right, what's up? Welcome to another edition, another end of day report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com. My goodness, we got some crazy volatility in these markets. The Dow down 1,000 points, then up 1,000 points. Just can't get it together. Don't know what it want to do. The market is spooked. It shook every 5 minutes. A news report is coming out and changes the overall market sentiment and direction. People are shook and don't know what to do. They don't know which end is up. And, I can't really argue with them on that because right now we're in a news cycle event. That's what that means. News cycle markets, okay? That's all it is. It's news driven markets, so they're bound to do just about anything. There's no rhyme or reason to it right now. It's just doing what it's doing. And it's weird. I mean, what do you say to that? All I can say is you better have the tools necessary to navigate these murky waters. All right, you better have it going on. You better have it going on, folks. And the only way to do that is with the pulse wave price triggers, man. Your algo has to be better than their algo. And guess what? I got you. All right, that's my department. I got you. You don't have to go nowhere. All right, hit that like button, man. Stop playing around. Stop playing with me. Hit that like button. All right, so basically, what we have here is a failure to communicate. All right, I look at my algo charts, as you know. That's what keeps me on the straight and narrow. That way, I don't have to panic. I don't have to overanalyze. I don't have to try to guess. I don't have to do none of that. I just take my many years of experience and do what I know to do. When things get wild, you have to know how to move in that environment. We love volatility. You want volatility. That means the price is moving. But you don't want crazy. Crazy is different than volatility. Crazy is insane. It's saying, I don't know what I want to do, so I want to do everything. And nah, you can't do everything. Either you're going up or you're going down, man. You just can't do it all. So the different techniques and strategies employed depending on what type of market you're dealing with. If you're dealing with a bear market, there's a selling short mechanism that must be kicked in. If the market is in a raging bull market, then that's another type of a mechanic that needs to be employed. When the markets are moving sideways and not trending at all, then there's yet another mechanism that needs to kick in. So depending on what type of a market environment we find ourselves in, that will determine what type of methodology that we should employ. All right, so that's what the algos are all made up of. Lets me know, what we working with. So far, this is what I'm looking at. This is what it's starting to look like. All right, it's looking like tomorrow we got a primary crash alert in gold and silver. I know you don't want to hear that. It's painful, I know. But you also got crash alerts in the S&P 500. You also got crash alerts in the NASDAQ 100. You also got crash alerts in crude oil and the Russell. Yeah, I know. It hurts. I do not have a crash alert or a rally alert in Bitcoin. What I'm expecting in Bitcoin is a continuation pattern, and it's looking like it could be a continued correction. So I don't know. We'll have to see. All right, now remember the nugget of wisdom I hit you guys with earlier. I told you, I said, um, for those that subscribe to the PulseWave price trigger reports, you already have your margin orders. But as for me, when you see periods of chaos like this, it's better to use the weekly price inflection point approach versus the daily, just so you don't get really chopped up. And that's really for those that have jobs or have things to do and you can't really set and watch the market on any given day. Then go ahead and use that methodology. But if you can check on it throughout the day, not a problem. Go ahead and do what you will. But just keep in mind, when we're in these type of volatile settings, you need to get in the habit of taking profits early. All right. When you see money, you got to take it off the table because the market is ready to reverse on you. All right. Because you're not trending. You're in a day trading environment, is what I like to call it. All right. So when you see that, you gotta do what you gotta do. All right. So with that said, let's jump in and see what we got going on these charts. We're going to take a look at gold. We're going to take a look at silver. We'll take a look at Bitcoin. Let's see, what else should we take a look at? Let's see. What do I want to do? I know. Let's look at GDXJ. You're going to need that. I'm trying to anticipate where the questions are coming from today. And I think definitely people are going to say, what's up with Bitcoin, man? And I'll get my head ripped off if I don't talk about gold and silver. So I got to do that. I think we need to look at what's going on with this Dow. And let's see. I think we need to take a look at what's going on with the Illuminati index. So we'll look at hack. And we're going to look at the real estate again. Let's see, you guys, I think we need to look at, let's see. I'm gonna throw in a few extra ones in here because I know that people are going to want to know how to move in a couple of these. So I'm going to just add a couple here for good measure. I'm concerned about some of these, so I'm going to, especially for the futures, I think I'm going to add a couple of the ETF equivalents for you. We got to look at the bonds, so we'll pull up some TLT for you. Let's see what else we got. We're going to take a look at financial sector again. Got to do that. And I think that's it. I mean, that's enough, right? All right, that's what we're going to do. Okay, that's what we're going to do. All right, let's see. All right. Ride those waves, Brandon. Ride those pulse waves, brother. All right, so here we go. Let's see, the chart's still booting up. I can't believe that the Dow futures, man, closed up 1,173 points. Just amazing volatility, y'all. I mean, how do you do it without the post-wave price triggers? How do you know where the intraday price inflection points are? You got to know these things. How do you know? You got to know. You got to know. You got to know which markets are saying, "Hey, I'm about to do something crazy. Come peep me. Come check me." All right. So while this is pulling up and I'm updating the charts, making sure I'm giving you up-to-date information. I recall prior to refreshing my charts, I'll be looking at data from like 2 days ago. And then I realized it after the fact. I'm like, oh no. So we want to be current. So I'm refreshing all of my stuff. Just hold on. We got quite a few charts to get through today, so bear with me. Now, tomorrow is the last day to go shopping. Tomorrow is Thursday. So if we're going to get any, significant turning points or what have you, it's going to have to be done tomorrow, folks. Tomorrow's Thursday. After Thursday, we got Take Back Friday. So we need to ascertain what is going on. I still don't feel right about some of these things. And it's still very risky to go into the weekend holding long positions because, again, they love doing crazy stuff over the weekend. That's like their modus operandi, to make huge, life-changing announcements while everybody's chilling on the weekend. All right, so here we go. First chart is gold futures. All right, here we are. Primary rally alert. Market breaks out here. Then here's this narrow range thing right here, just like I said we would. And guess what? It now gives us another primary crash alert like we got back here. And look what the market gave us. I think we're about to head back down in the gold. And for whatever reason, this is what it is. We ain't got to like it, but we do have to deal with them. We do got to trade these markets. No matter how crazy they are, you still got to trade these markets. So here we are. I think the rally's going to get sold. We'll leave room for doubt, but right now it's looking like the gold futures wants to correct. If you don't want to trade the gold futures, there's always the G to the L to the D. Similar chart pattern. It should be if it's tracking gold, but we don't have that actual alert though. We don't have the actual primary crash alert like we do on the gold futures. So what you do is you take your cue from the gold futures and look for the intraday price inflection point that the PulseWave report will give you. So the reports have already come out this evening. So all you have to do is look on there and look at that, and it'll tell you what conditions you're looking for to see if that short's going to come into play or to see if the market's doing a head fake and breaking out and heading north. So trade accordingly with the GLD. All right, moving forward. This here is GDXJ. Now, GDXJ, make no mistake, we're still in a correction off the bull run high. We're coming off of this primary rally alert. Now we got a narrow range inside day and within the Kumo cloud. So breakout is imminent, possibly as early as tomorrow, or maybe this is going to be a late bloomer and we may get a breakout on Friday or Monday. All right, so just keep your eyes and ears open on the GDXJ. All right. Moving along, we got the GBTC, the ETF equivalent for the Bitcoin, and it's a mess right now. It's consolidating on top of the Kumo cloud, but below the trend line. Trend line support has now become trend line resistance. Market is respecting it. We got primary rally alert, primary crash alert, primary rally alert. So like I said, we're going to trade inside of the range. The higher of the bar band here, the lower the bar band here. These two back-to-backs cancel each other out. You got another one here. So it's just letting you know that we are getting possibly close to maybe breaking out or breaking down. But this is the range that we're trading inside of. Notice how the market respected and traded within that range today. Can't make this stuff up, folks. That's why you got the algo charts. So tomorrow, right now, it's looking like the bias is to the upside. We'll have to wait and see on that one, see what the Bitcoin futures do tonight. All right, people been riding this Clorox, this fear stock right now. It's benefiting off of fear. and you see these incredible bars. Look at this bar. Really? The high is 172.54. The low is 155.83. You got a $20 trading range in a stock? This is crazy. All right. So basically what you're doing is the same thing. You're trading inside of the trading range. Market is in a, it's range bound because you got these super elongated bars and you're just trading inside of it. The low of this bar and the high of this bar is your trading range. And then you have a narrow range today. Narrow range day. I, who knows? Who knows what it's going to do? You just got to watch it. That's all I got to say. I would choose better candidates. Whenever you don't have a clear direction, it's better to find something that does and trade those. Like here, Colgate does. You have this is a secondary rally alert coming off the back of a primary rally alert. And this one looks better, like it has the potential to go higher more so than the Clorox does. All right, so definitely watch this one. More than likely, we'll get at least a continuation pattern tomorrow, which means we should put in a new high and close above this bar's high. All right, that would be a classic continuation. All right, let's go to Bitcoin now. This is a Bitcoin. Bitcoin, again, we're consolidated within the Kumo cloud on the composite. We got bullish weekly trend momentum, but you're consolidated. The market has ceased trending up or down. You are moving sideways. Look at the sideways action. Bar to bar to bar, back to back to back. You're not going anywhere. You're stuck in this range, and you're stuck in the Kumo cloud. Until this market gets out of the Kumo cloud, you have absolutely no direction in the Bitcoin right now. All right, so here's the Dow futures. That's been the nasty chart. All right, here you go. You got this primary rally alert here. You get some follow through right now, and it's like in a holding pattern right now. It's trying to decide, is it at resistance? Is 27,500 really overhead resistance? Is that the strong overhead resistance that the market can't break? All right, that's the question that needs to be asked right now. Can it do it? Is it struggling? Can you get that additional 800 points out of it? I don't know. It's looking like this is probably a candidate for selling right now. Just by looking at this chart, it does look like it could be sold. This one went lower, then reversed and went higher. Following bar, you went higher, then reversed and closed lower. Next bar, you rally and then you stay there. Market is really undecided, but I'm going to say bears are still in control of this market, man. All right. So I'll be looking at the DXD myself, not getting long, not in this environment, not right now. XLF, same thing. You got your rally alert, crash alert back to back. That means you have a trading range, expect a narrow range day to follow. That's exactly what happens. You get the back to the back, trading range established, top side, bottom side, followed by an inside day. I told you this yesterday that was going to happen. Did I not? Did I not say narrow range inside day? Before this bar was created, did I not say that in my last video? Yes, I did. What happened? Boom. It's giving you exactly what I said that you can expect. All right, and that's your financial sector XLF. So if anything, it's going to try to rally tomorrow because you got this primary rally alert here. Even though it's a narrow range, we know breakout or breakdown is imminent. But right now, it's letting you know that the order type, the trading activity is leaned to try to squeeze a little bit more upside out, to squeeze some of these shorts out. And then at that point, that's when the sellers will come back into the market and then put pressure on it back down again. We might not see that manifest for a couple of days, which means we might not see it until Monday. All right, now this is a really good one. Now this is the bonds. This is the TLT. Now I'm feeling the TLT right now with this one because we've been talking about the possible correction here. So I see this definitely looking like it wants to play out now. This is a primary crash alert. I think the trend line down here around the 145 is in play. All right. If you can short this thing for the longest time was on the do not short list. All right, they wouldn't let you short it. They say your broker, error message will come up. It's not available for shorting, or we can't locate the shares to short it. So you don't have a choice but to go into the TBT. TBT doesn't move all that much, so you have to go in and you have to trade volume. You got to trade leverage. You got to trade massive amount of shares to make it worth the while on the on the TBT, which means you're looking at 500 shares and up. 500 shares, 1,000 shares, 2,000 shares. That's what you're looking at on the TBT if you're going to short it, okay? Because it doesn't move that much. Just saying. ETFs that hardly move and have very small trading ranges, you got to trade more shares. All right. The more volatile ones, you don't. You can trade 100 shares and be just fine and make a killing with them. But these lower volatility ones, you can't do nothing. Look at this. Look at some of these bars. Look at this. Look at these low little teeny bars. It's not giving you a whole lot. You know, every once in a while you get one of these big movements, but look at how many little teeny bars you got along the way. Not a lot of volatility, right? So just throwing that out there for you. So I'm looking at those bonds are starting to correct tomorrow, which means the equity market should rally tomorrow. All right, taking a look now at the semiconductors, primary rally alert, trying to push deeper in the cloud. Overhead resistance is the trend line resistance, and it's respecting it. That's 2 days in a row. It's respecting that trend line. Having a hard time pushing out. So I'm thinking the bears are just waiting to come in and short it again. So we're going to have to get one more push tomorrow. And then we'll see if that's enough blood in the water for the short sellers to come back in. And really, I think we're just going to probably just fill this gap, man. I think we're just going to come up here, get close to the resistance, and then just turn. So you got about one more day or two of this rally in the semiconductors before we roll over again. All right, taking a look now at silver. High hold silver away. Okay, this right here is your primary rally alert. Boom, boom, boom. Narrow range inside day. All right, you got one more chance tomorrow to really get up here around the 1740, 1750 resistance area. Can it close in the cloud? It should get enough rallies energy behind it to even get outside of that cloud. So we could see ourselves getting a real good push on this bounce. If not, bears are coming in around 1750. I'm telling you, 1740, 1750. The bears are going to come right back and just beat it down. We are still in a correction, which means we're still under the bearish weekly trend momentum. And I think that's what they're waiting for the big smackdown. They're going to lay down the smackdown. All right, here's your silver equivalent. It's the SLV ETF for those of you that don't want to go in and ride that silver futures. All right, here's your SLV. If you're going to go in and try to buy, if it breaks out, you can do that. Just keep in mind it's $16.30. Somewhere around there is going to be your overhead resistance, okay? All right, and that's going to carry you to around 1660-ish. All right, so not a lot of money on the table, but that's where your first initial resistance is. Your second target is going to be the trend line resistance located inside of the Kumo cloud. All right, so that's not a whole lot of upside potential. That's that 1651 I was telling you about just now. So there's your SLV. I think the bears are going to come in and beat this one back down too, because you filled the gap that you made on the way down. You got one more, and that's in between right here. I don't know. Like I said, there's so much news cycle controlling the markets right now. Here's your Starbucks. Here's that initial rally. You know, I got up all up in here, and you saw how it came back down. Now we got another primary rally alert. It's going to try to push again. This is kind of like a slow push. You rally, then you give some back, then you try to push again. It's just really fighting. The overhead resistance is real in these markets, folks. It's real. It's going to take a lot of energy to get the markets back right. If not, I'm telling you, the markets are just waiting for a massive leg down next week. It's looking like that's where we're going. Once again, your NASDAQ 100 is the QQQ, the tradable ETF. Here's your overhead resistance, the trend line resistance. Look how the market paid respect to that today. It's really struggling with that overhead resistance, all right? If you're going to get into 220 and close there, tomorrow's going to have to be a good push, all right? It's going to have to be a good enough push to get us maybe to 225. Failure to do so is going to bring the sellers back in, and they're going to beat this market to death. Straight up. I'm telling you, watch your DXD and your QID and your SDS tomorrow for clues. That's all I got to say. Keep your eyes and ears open, man. You gotta go in here, not blind. All right, here's crude oil futures right here. All right, primary crash alert now in the crude oil futures. So we're going the other way. Remember, I was long that OIH. I went ahead and pulled that. I didn't like the way it was moving. So that's a break even trade. I just got the heck out and said, forget it. I wasn't interested in shorting it. I just wanted to get out. So that's what I did in the OIH and the dig and the Doug. Doug was down $2.66 today on the close. Not really feeling that either. I'm going to let the markets show me what's going to do. Here is that primary crash alert. It's looking like it wants to put in a new leg down. That could possibly drop oil, you guys, into the 30s. We haven't been in the $30 range in a long time. All right? So this is threatening to fall, folks. Hard. Really hard. So depending on what we look like, I could be tempted to get in there and operate in that. We'll see. All right, here's the OIH I was telling you about. Remember how this had that primary rally alert? I went ahead and took it and got out in here because I didn't like the way it was moving. So I got out, and I'm glad I did because look how it came back down. When I posted that in the room, I told you guys I was pulling it. I didn't like the way it was moving. I'll do that at times. Like I'll put a trade on, I'll get filled. And if it's not really moving the way I was expecting it to move, either from getting long something or selling something short, I'll just pull it. I'll take the small loss or the break even on it. I don't care if I don't like the way it looks. If it's not doing right, if it's not acting like the algo suggested, that means something has changed, and that means that other institutional money too may have changed their minds. They do the same thing, folks. The big institutional money, they do the same thing. Trust and believe me when I'm telling you this. If it don't look right, they'll pull it. And that could be why it lost momentum here. Because we did definitely have buying up in here, these two bars here. But then look what we did. We just reversed and gave it all back down. Now it's threatening to really fall through the floor. So I wasn't the only one thinking that. I didn't like the way it was looking. I didn't like it at all. So I had to get out. Now I'm not even really interested. It's an $8 stock. I don't short $8 stocks. It's not worth my time. The most you can go to is zero. This ETF is not going to zero. So even if it did, it's not worth it. I could put money to work somewhere else. So not interested in this one. If anything, if I wanted to go in and capitalize on the downside, I would just buy DUG. You know what I mean? Shorting UCO and USO is not, it's not worth my time. All right, so let's see. Getting out of this one, going to NVIDIA. NVIDIA was a good one for me. I went ahead and took advantage of that. Remember, we came in here on this rally alert, and excuse me. So this was Monday's chart. This is Tuesday, and this is Wednesday today. So I went ahead and took my money. I'm glad that I was able to make those couple of bucks. Got another push today. Now we got a rally alert. So I'm expecting possibly a narrow range inside day tomorrow. Trading between the range of these two bars right here. Boom, boom. Because we got a cancel out. Crash alert followed by a rally alert, or a rally alert followed by a crash alert the next day is a narrow range trading setup situation that the algo is alerting to. So when I first saw this one, like, ooh, okay, it's topped out. Maybe I'll get involved on the short side. But then after what happened today, trading range, narrow range day tomorrow, we we will have an inside day. We will trade sideways inside of this trading range until the market is ready to break out or break down, and more than likely, it's going to take its cue from the Dow, the Nasdaq, and S&P, and the Russell tomorrow. So this one is definitely a watch, but I'm not interested because of the situation. Like I'm saying, a lot of these markets are just tore up because of the news. The news cycle has destroyed the market. This whole coronavirus thing has destroyed the natural ebb and flow of the markets. If this was just any given day and we didn't have this nonsense going on in the news, I could boldly take positions in anything with or without an actual buy or sell signal and do just fine. But because of the risk exposure that exists, even in the middle of the trading session, it's just become so just crazy. And I don't like it. I do not like it. Don't like it. All right, question here. Someone says, can I look at ALEC? Is ALEC the actual ticker symbol? If it is, let me see. Let me see here. I could do you a solid. Let me just see if we got it in here. Elector, is that it? ALEC? Okay, let me see here. Let me see if we can get that up. Well, what do you know? All right, so here is the algo chart for ALEC, Elector. All right. So, as you can see here, market's coming off of a primary rally alert. Market has been steadily moving up. And we have a secondary rally alert for tomorrow. And we have the beginning of weekly bullish momentum, upside momentum. So this one's definitely a buy. And it looks like the initial target is around 37-ish for ALEC. All right. So this one's looking great. Looking real nice. And you can see here that for a minute it was consolidated also. This chart is a perfect example of what I was explaining to you guys, how the markets behave. So you had that primary rally alert coming off of the back of this primary crash alert. When you see something like this, the trading range is established. So the market traded inside of this bar for multiple days. Kept giving you all these back-to-back signals too. Multiple days. And then finally, on that last crash alert, you finally got that drop. So yes, consolidations can last several bars. So you have one. Notice how this right here, like I tell you, it's always followed by a narrow range inside day. Always followed by a narrow range inside day. That's how you know you're consolidating. And then it just drags on out. So you dragged out. So the first day you got that narrow range inside bar that I always warn you about. So that's 1, 2, 3, 4, 5, 6, 7. All right. So you got, a week's worth of consolidation. Then on the 8th day, you drop and finally break outside of the trading range. And then you proceed to head lower. So this is that classic trading range warning that I've been telling you guys about. And then you saw how the market behaves, and now it's trying to muscle its way back up again. This is a really good one. Now, see, if you were a PulseWave subscriber, you would have got this report, and you would have known what was coming because this primary rally alert was back here. These two bars are just moving in tandem with the alert from back here. Boom. Now you're getting a secondary alert, which means the market's ready to put in a new leg higher. Off the chain, isn't it? I know. All right. Let's wrap it up. Here's Nike. Remember, I took that position in Nike, took my profit, got the heck out of the way. And now the market's trying to decide what it wants to do as it's struggling with the overhead resistance at 95. 95 seems to be a problem for this market. And I don't know if it's going to be able to overcome it. Bottom of the Kumo cloud is acting as strong resistance. So we could be exhausted. I don't know. Yes, this is a bullish pointer. I know what you're going to say. Yes, it is. But you can make an argument that this bullish pointer here, this is just a fulfillment of this one here. That's why we reverse the next bar, Just saying. Still got this gap up here though, so there's some hope. But I don't know, man. If you took the coronavirus out the picture, then I would have a different feeling on it. But because of this coronavirus news story, it's not going anywhere anytime soon. It's jamming up the markets. All right, here's another one. We're consolidated outside, of everything. We're above the trend line. We're still in a bullish makeup. This is Netflix, but we did top within this situation. So I'm expecting at some point the market to decide what it's going to do. But Netflix is benefiting off this coronavirus story. Primary rally alert going on the back of a primary crash alert. Expect a narrow range inside day tomorrow, folks. I'm sorry. I don't make the rules. This is just how the markets like to behave. I'm just showing you how the markets behave. Primary crash alert canceled out by a primary rally alert. Boom, narrow range inside day tomorrow. You're going nowhere. All right. This is the IYR, that real estate ETF I showed you about. Had that primary rally alert right here. Market's been moving higher, and it's still doing good. But right now we're setting it overhead resistance around that 96 handle. Can it break through it? We shall see. All right, next one we got here is Hack, Illuminati Index. All right, so we're coming off the back of this primary rally alert, but we're under the Kumo cloud, and we have the trend line that is inside of the Kumo cloud too, making this a double whammy, a double resistance zone area. So I'm expecting nothing. I'm expecting nothing to come from this, because 42 is going to be a whopper of a resistance area. That's $2 more away though, so yeah, you can pick up a good $1.15 if you were to get long it tomorrow. Maybe you could pick that up, but there's also a chance that we fall here, folks. These type of setups are very bearish. Got the overhead gap, I know. Got your primary pointer there, I know, but it is what it is. All right, so that's all we got. AAL, is that the actual ticker, or did you mean to say Apple? Which is it, my friend? You want me to look at Apple, or do you want me, is that the actual ticker, AAL? Let me see here. AAL. American Airlines. All right. Well, here we go. There have been a lot of talk about the airlines, so let's see. Let's see what we got. All right. American Airlines has taken it on the chin. Mad gappage below the Kumo cloud and below the trend line. And it was above the trend line. Then we had that primary crash alert here, followed by a secondary crash alert here, followed by a gap here. Now we got a primary rally alert for tomorrow. You know what? This one's not bad, actually. I think I like my chances on the primary rally alert for tomorrow on American Airlines. I like that. Yeah, that's a good alert. That's a strong signal right there. I'll take that. And this should be good for at least somewhere back up here into filling the gap to about 26, 25, 26. So I like that. You giving me a good idea for tomorrow. Good looking out. I like this one. I'm gonna make a note to myself because I like it. I like it a lot. Let me make a note. So AAL, we got that primary rally alert. All right, I'll make a note. Good looking out. I like it. I think I'm gonna get long that one. All right, so let's see here. Someone's asking about Ethereum. Let's pull up Ethereum. Let's see. Boom. All right, here is Ethereum. All right. What have I told you about these back-to-backs, right? Primary rally alert followed by a primary crash alert means narrow range inside day right here. That's what we got the following day. This is where we at. This one's consolidated until it breaks out of the training range established hither. All right. Got to break out of the range. So this one is, there's nothing there. There's no signal until it breaks out of the range. All right. Someone commented, Trump said today that he hadn't given the airlines any money yet. Yeah, but a chart is a chart. That chart looked like it's ready to, we're going to get at least a strong technical bounce. It's not saying it won't go down any further, but hey, I like that American Airlines. And I think from the way that that chart looked, it's definitely worth the, it's definitely worth it. It's definitely worth a risk play on that one. The risk is minimum. It's not too far away from the support, so I don't have a problem with that one. I like the risk to reward ratio in that particular one. So I like it, man. I like the way that I like the way the system was reading that. Like for real, I like that. So good looking out. Let me just see here. I'm gonna have to make a note. That means I'm gonna have to update possibly the charts for everybody. Let me see. Let me see. I don't know if it's already built in the system yet. If it's not, then I'm gonna have to add it. Oh, we already have it. We already got it. We already got it. All right, that's good to know. So American Airlines is already in the reports. Outstanding. All right, BTG, Bitcoin, gold. No, that is not in the list right now. I'm sorry. That's one of the ones that was on the report before, right? I don't think that's in the report now. You can correct me if I'm wrong. Is that in the report? I can't. I'm tired. I know you hear it in my voice. Is it if it's on the sheet? Then yeah, I should be able to get it up. I can't remember what's on the reports anymore. We got like over 1,000 securities, so I can't remember all of them. But let me see if I can pull that up right quick. Give me just a second. Let me see. Let me see. How they say eyes tied? Brother say he tied. Okay, Bitcoin, BTG. Oh, I'm looking in the wrong report. My bad. Hold on. Cryptos. Okay. All right. Did you want the BTG? Tell me, what do you want? Do you want the USD or you want the BTC? What you want? That way I know which one to pull up. Let's see here. Here's that one. Oh, you want the BTC? All right, good. All right, here we go. Let me pull it up. All right. Chart looks jacked up, don't it? Looks like a mess. All right. So here we go. The algo chart says you got overhead resistance at the trend line on this one. All right. So it's going to have to get over the trend line. And it's looking like it's trying to. You're coming off the back of a primary rally alert from a few days ago, and you're still trading within that. Been respecting the trend line, the overhead trend line resistance, though. been respecting it really well. So on this one, I would definitely say that the weekly trend momentum is bullish. All right, but you're still in a bear market. You're still in a downtrend channel. The question is, are we going to get another pop up like this, how this one popped up? And this is a bullish pointer, by the way. So I think right now, the bulls are in control of this one for right now. We've ceased trending lower. We bottomed out temporarily. So yeah, I like this one to the long side for tomorrow. Just keep in mind you got this overhead resistance. If it doesn't overcome it, then you'll probably have to go ahead and pull the trade. All right. All right. So that's about it then. All right. And so you guys know, that was my man Cramerica. What up, Cramerica? One of our moderators who does a heck of a job moderating in the trading room. You the man. All right, so with that being said, folks, I'm out of here. PulseWaveTrading.com. Don't forget, you can start trading with us for as low as $69, man. Come break bread with us. Make some paper with us. Make some money with us. And smash that like button. Share the video with someone you never know who it may help or encourage. And go ahead and subscribe if you haven't already done so. Hit that bell icon. And I will see you guys back here tomorrow morning for pre-market pulse scan. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And what that means is take what profit you can extract from the markets on a daily basis, and don't be a fool. Use your stops to protect your profit, lock in profit, and don't turn winning trades into losing trades. All right? Be encouraged, and I'm out.